let people in. Hello, everyone. Welcome. I'm going to give everyone about a minute and a half to join this session today. And while you're joining the session today, I'm going to do a little bit of housekeeping with everyone. So the first thing we're going to do is we're going to give a land acknowledgement for the province of Alberta. At Business Link, we are honored to provide services to all entrepreneurs and specialty services to our immigrant and Indigenous entrepreneurs. We want to acknowledge that in the province of Alberta, we are situated on the traditional territories of Treaties 4, 6, 7, 8, and 10, ancestral homeland of diverse First Nations group, Métis, and Indigenous people whose ancestors have walked this land since time immemorial and whose histories, languages, and cultures continue to influence our vibrant community. We pay respects to the Indigenous people of this land, past, present, and future, while recognizing their cultural heritage, beliefs, and relationship to the land on which we reside. So I'm going to do a little bit of housekeeping with everybody before we start. So the first thing I'm going to do is click on my video so you know who I am, the mystery voice behind the land acknowledgement, and welcome everybody to this session, Understanding Financial Statements. Karen Stix will be our presenter today, and she's going to start in about a moment and introduce herself, and then we're going to dig right into it because there's a lot to cover today. Before we do, you can look down at the bottom of your screen and you can see Q&A and chat. So if you're familiar with Zoom, you have two ways to ask us questions. If it's a real relevant question that you really want answered, stick it into the Q&A. If you want to chat and say hello and download the handouts that I've posted into chat for today's session, we've got some handouts. You can head on over to chat, say hello, put your thumbs up if we ask questions and say, oh, can you see this or do that, and interact with the chat from there. But I'll be taking questions and we'll be doing that throughout. Few other notes to consider is that this session is being recorded. So in the next 2 to 3 business days, we'll be able to get this one posted to the website. The difference between recorded and live is that live, you get to get your answers to your questions, and they are usually burning questions you have about something related to financial statements. This is going to be a good one. And for those of us who aren't financially savvy or who try to, hide under the bed sheets when we say financial statements, this one's for you. So without further ado, I'm going to hand it over to Karen. Karen, welcome and thank you for doing this today.
Well, thank you very much for having me. This excites me because I'm speaking to some entrepreneurs, and I'm one myself, even though I'm a bean counter by trade. I've actually had a long career and I moved into retirement a little while ago. One of the things we do is this for professional development to keep our professional designation intact. Currently, I operate 3 small businesses, one called Stix and Associates, one called Strawberry Farm and Friends, and one called Skiers with Stix. Prior to that, in my former life, I was a CFO and general manager of a number of mid-sized companies here in Alberta and British Columbia. So I'm really excited that I've moved to that stage of my career, and I'm doing things I love to do. And I'm currently in harvest season, so I can use some examples from my harvest season to make this presentation a little bit more exciting and hopefully relatable for you. If at any time you have questions, please do ask. I'd like to include your businesses in with this presentation if at all possible. Okay, so we're here to talk about understanding financial statements. A lot of great entrepreneurs tend to know whether their businesses are doing well without a lot of reports. They come up with some key indicators, key things that help them. However, you don't want to necessarily assume because you have this knowledge that the financial statements are not without merit. Because financial statements are very important for the people that are supporting you in your business. And it's important to be able to produce these for them to look at and see how successful you are at any point in time. So here we go. Common questions that business owners ask are, how is the business doing? Did we make money this year? What does my profit and loss statement tell me? Why do I need a balance sheet? Where is my cash coming from? Where is my cash going to? And why isn't my cash equal to my profit? So we're going to spend most of this session. There's 21 slides in total, so that gives you some idea of how long it'll take us to get through this as I'm going. We're going to talk about the statements, the profit and loss statement, the cash flow statement, and the balance sheet. They're all called different things, as you can see sometimes. And sometimes the profit and loss statement is called the P&L, income statement, the earnings statement, or statement of comprehensive income. The cash flow statement can be called sources and uses statement, statement of changes in financial position, balance sheet, sometimes called the statement of financial position. But those are the three main ones we're going to focus on today. So let's first understand the profit and loss statement. Basically, you're comparing revenue and expenses, and you're hoping there's a profit when you compare revenue and expenses. Revenue minus expenses equals profit. They're prepared to account according to accounting rules. So there are rules that you need to follow when you're preparing them. One thing to note is that revenue may be recognized before or after cash is received. And similarly with expenses, they may be recognized before or after the cash is paid. So your profit's going to differ from your cash balance because of the accounting rules. So primary categories of revenue and expenses. We've got sales activities, which are really your revenue and expenses associated with selling to customers. So for example, in my farming business, I'm selling carrots. So my revenue is carrot revenue. People pay me for my carrots. My operating activities, I had to pay somebody to pick my carrots. So one of those is, the salary or the cash that I have to pay to my subcontractor. I have my subcontractors actually invoice me, and then I pay them by invoice. So the other thing is there's non-operating activities such as interest, income tax, and one-time unique payments. Well, for example, this year, one of my big expenses was my fancy irrigation system that I upgraded at my farm. So that's kind of like a one-time expense, I hope. It was a lot, and so I hope that it lasts for a while. Let's examine the profit and loss statement now. We've got sales activities, revenue, again, known as sales, cost of goods sold. So it's a term, revenue. I guess a cost of goods sold for my carrots would be the seeds that I buy, right? That would be a direct cost related to the carrots. So what's my gross profit on that? The other thing that would be directly related to that is possibly any labor to plant them and any labor to pick them, any watering that takes place by labor in between, that sort of thing. And you can see how it's portrayed on this little sidebar profit and loss statement neatly, so that you can see, oh, okay, revenue 100,000, cost of goods sold 36,000, and on that gross profit 64,000. Wow, that's pretty good. However, that's not where you end. How are we doing for questions so far? Still good? All right. Let's examine the profit and loss statements more. We got operating activities, and those are selling expenses, research and development, general and admin, and depreciation. So for example, if I put in an irrigation system that's going to last for the life of the farm and it costs me, say, $10,000, I'm going to set that up as a fixed asset and possibly depreciate it over the life of what the asset is supposed to exist for. Selling expenses, well, that can be anything related to selling. We were at a farmer's market in Calmar, and we had some expenses related to setting our table up and getting some baskets in place and that sort of thing. Research and development, well, that can be anything. General and admin, we keep our business lean and mean. The general and admin right now is me, and I try not to charge too much for that. So you can see again how this is set up in the sidebar here. Operating expenses are below the gross profit line, and those total 44,000. The operating profit has now become only 20,000. So that's how you start to erode your profits is by your other expenses starting to ramp up more than they should. Let's examine the profit and loss statement again. Your non-operating activities of interest, income tax, and other items affect your net profit. You can see again, just look at how this is arrayed. Off the bottom line of operating profit comes interest. Of course, if you take a loan out, you pay interest on it, and you hope that the interest is at a fairly reasonable rate so that that doesn't erode your profits too much. It's ideal to be able to fund your business on your own with self capital and to gradually expand business. It's also advantageous to just load up all at once, take the debt on all at once so that you can propel the sales forward quicker. Depends on whether you want a fast startup or a slow startup as to how much you put into the business at the start. Okay, so this is obviously a business that's making money, because guess what? They pay taxes. If you make money, you pay taxes, and then there's your bottom line net profit. Any questions on the income statement at all? Pretty straightforward. It's your revenue minus your expenses, and that's your profit. And if you make money, you pay taxes on it, really. Understanding the balance sheet. So there's a couple different sides to the balance sheet, the assets, and then the other side is the liabilities and the owner's equity. The assets equal the liabilities plus the owner's equity. So you can see the assets can be consisting of cash, money customers owe, inventory, plant, property, and equipment. On the other side, liabilities, what the business owes, money owed to vendors or money owed to lenders. And then there's that section of owner's equity, who would be the money owners like yourself have invested in your business, and profits not paid out. So any money that your business has made so far that you decide to keep in the business to fund future business activity.
So I'm going to pause for a question here, and I don't see it in chat or Q&A, but I know we get it often. What about sweat equity? Do you account for that in any of these financials? For example, the balance.
Sweat equity is something. Say you're the owner, you're putting your own time in, you're not paying for your time. Generally, we're not accounting for that in a financial way, and but it is something to make a note of. It doesn't often appear on the balance sheet or the income statement, and it's something we need to value. So we can keep track of it as a sidebar item for sure and bring that into the equation. Sweat equity is different than cash invested in the business, obviously. My sweat equity is I go out to the farm and I dig carrots and I don't pay myself, and I haven't got that recorded anywhere.
That's it. Yeah, that's a real interesting one. We often get that question. And one of the things I noticed in my business was if I started to track my own sweat equity into it, and I said to myself, so if I clocked in and out every day like I would if I were an employee to my business, I could track that. And then I could also track and manage what I was doing in my business that was really not something that was valuable enough for me as CEO of my company to be doing on a daily basis, and figure out ways to outsource it or offload it as I grew my business. So it's another great reason to track the sweat equity, even if it's not showing up in your balance sheet.
You're talking about the opportunity cost of your time. If you can figure out a better way to spend your time, it's going to help your business, and that's really an important point you make. Moving on from there, understanding the balance sheet is important because it's a snapshot in time. It's a point in time, whereas the income statement is a compilation of what you've been doing for the entire year. So for example, on December 31st, your income statement might show either, say, the month of December or the 12 months of the year, whereas your balance sheet simply shows where you are at that point in time on December 31st. So at that point in time, your assets and liabilities are generally carried at historical value, and the physical assets are depreciated, and the historical value may actually be different than the market value. Now, what do I mean by that? Say you're carrying some land. Well, the historical cost of the land may be different than the current value of the land. Generally speaking, land tends to go up in value, so you'll be carrying the land at a lower cost on your balance sheet. We were just talking about opportunity cost. Now, as the value of that land goes up, you're sitting on that land and you're using it to grow carrots. Is that the best use of the land? Something to think about. Depreciation, we just touched on it. Many of you have probably purchased some larger assets for your business, and each year, basically what happens, you'll record these fixed assets on your balance sheet, and then they will in turn be depreciated to reflect the wear and tear for that year. So the balance sheet will show the cost of that asset less the total depreciation to date. So it'll show the value of the asset going down over time. Whereas the profit and loss statement will show the annual depreciation as the operating expense. So we'll take another look at the balance sheet in a numerical way. We were assigning some values to the cash and the inventory and the accounts receivable, and the fixed assets, the plant, property, and equipment, less the depreciation. So it looks like this balance sheet has total assets of 100,000. Those are broken into both current and long-term type assets. You've got current assets of 55,000 and long-term assets of 45,000 for a total of 100,000. On the other side of the balance sheet, you've got your liabilities, both current and long-term. And you can see that your current liabilities are sitting at 35,000 in total, consisting of accounts payable and bank loan payable, whereas your long-term liability is bank loan payable. Question that often I've heard asked at this point is, what is the difference between current and long-term? Well, once something is 1 year or more, it's considered to be long-term. So if it's going to take you longer than a year to pay off that bank loan, it gets classified under a long-term liability. Similarly, with the assets, you can see the cash and inventory account. You're hoping you're going to turn your inventory over in a year, and you're sure as heck hoping you're going to collect your accounts receivable in under a year, whereas your fixed assets may last you 5, 10, 20, who knows how many years, and that's why they're classified differently. Lastly, on the balance sheet, you've got owner's equity. So you'll start off possibly with the owner's investment, not just sweat equity. Usually you put some money into it to buy the things you need to get started. And then there will also be a stakeholder investment called retained earnings, which are your earnings in the company that accumulate over time, that you choose as a shareholder not to take out of the company, just so that there's some capital left in the company to operate with. So here's a look at the complete balance sheet. And you've heard how balance sheets have to balance. Well, that's what you're seeing here. The total assets of 100,000 equal the total liabilities and owner's equity and of 100,000. And we talked about the detail there in other slides. So you can see that that's all been compiled neatly, and that's what your balance sheet would look like.
So this, though, is changing for some companies on like a daily basis or weekly basis. How frequently does what you see in your balance sheet change throughout your business year?
Well, your balance sheet is affected by your operating and your income statement. So it changes by minute. It just depends on how often you want to look at that point in time. So if you wanted to look at it daily, you could. But generally speaking, business owners are quite busy. So it's a really good idea to look at it at least once a month to really tap into, how did I do this month? And to compare it to a previous year's month as well. So comparatives are really very useful as you advance in the business. Just seeing what you're looking like from one year to the next on a monthly basis. That's typically the time frame that you look at these things. People also in the banking industry, if you're taking loans out, they like to look at it from a quarterly perspective. But generally, monthly and quarterly is the time frames that you take a picture of the balance sheet.
Okay, so that's a good recap. And for people who have accounting software such as Simply or QuickBooks or that sort of thing, if your accounting system is current and set up properly and your bookkeeper is tracking everything properly throughout the month, you can actually just generate these quite quickly and go back in time even in your accounting software and generate them if you want to take a look at last year and then look at this year and just generate those pieces of data right out of your accounting software. So it's another benefit of having accounting software and having a bookkeeper working with you so that you can be much more current and up to date with tracking what's actually going on instead of working on all of those hunches we all work on. I know I work on hunches in my business too, where I'm like, oh, I don't want to look at this. I'm just going to hunch it out. Oh, we're normally busy in August and not so busy in July and so on and so forth. But hunching doesn't get me sort of a more effective and efficient management. So I try to do it, but I will shamefully say I don't do it as much as I should.
What I think you might be also alluding to, and we don't go through it in this presentation, but because you brought it up, I'll briefly mention, plan. You have a plan. You have an idea of what you want to do, and you have a goal. And what's really useful is when you turn that into a budget, and then you have some actual performance, and you can compare that to your budget, and which is also your goal. And then you can say, oh, okay, well, this is what I wanted to do, but this is actually what I did. Why did that happen? What could I have done differently to make it happen better for the future? And that is something you really want to get into fairly early in your business, because if you don't have a plan, you could go anywhere, and you don't want to just go anywhere. You want to go where you want to go. And there will be so many things pulling on you, as I well know with all the little things that I get involved in. And you really have to stay focused. And that's what that plan and that goal setting does for you. We're talking back about the cash flow statement. So a business pays the bills with cash, and without sufficient cash flow, we know the business fails. So the structure of this is you will have some cash at the beginning of the period, you'll receive some in, and you'll pay some out, and then you'll have some at the end of the period. And so that makes up for the cash flow statement. Pretty straightforward. And you get the cash flow from different places. We talked about from operations, generated from the operations of the business when you sell your carrots or you sell your accounting services, or you sell whatever it is that you're doing. And you can also get cash from borrowing money. That's not the best kind of influx into your business. We really want revenue mostly, but sometimes it's important to get an advance loan so that you can move forward quicker on some of the things you need to do to generate those sales. And then you'll be repaying the loans, and that'll take away some of your cash. And then you'll be both purchasing and selling assets, which will both take away cash and bring cash into your business. So we're looking at a little cash flow statement here. One here where there's some operating activity and some financing and asset activity. So you're taking in some cash sales here of $5,000. You're getting some sales from your credit and debit card collections of $10,000. There's some customer payments that may have, say, come in from, who knows, it could be accounts receivable. So if you gave somebody credit and you're not collecting it until later, there you've got a big influx there of $75,000 for a total of $90,000. Then you've also got some loan proceeds that came in. Somebody lent you some money, and then as an owner, you've invested 13,000 into your business. You didn't happen to sell any assets, so that's zero. So the total financing net asset activity is an inflow of 45,000 for a total cash received of 135,000. Here's some cash paid activities. You've got some payments to suppliers, workers' salaries, operating expenses, and some loan payments, dividends, asset purchases. And you can see that all itemized in the cash flow statement here. Total operating activities adding up to $75,000 being paid out. You can see inventory, general operating expenses, interest, and income taxes. And then as well, you can see financing and asset activity. You've had some loan payments. The owners didn't require you to require any dividend on this one, so there's zero there. It's generally another way of paying themselves some money. And there was an asset purchase up of $50,000 here. So the total cash paid out here is $127,000. So let's take a look at the balance here. You can see the cash at the beginning of the period, 17,000, the cash at the end of the period. Are we in a better position cash wise at the beginning or at the end? Well, it looks like we've added to the business by a little bit. We've added $8,000. So that's a positive thing, generally speaking. Now you were given a handout, this other business called Flash Cow. If you wanted to access it now, you could, and just see, here's a different looking cash flow statement. This one that I'm showing you on the slide is a fairly positive looking one where it does improve. You can see that this business is a little bit more established than this other one on the handout. Now, the one in the handout, it says cash at the beginning of the period is zero. So right from that, you can go, probably a startup business, and cash received in. They've got some cash sales, good. They're starting to sell things. Credit and debit card collections, good, 20,000. Customer payments, great. People are paying you 30,000. You brought in 60,000. You took out a loan of 30,000 and you invested yourself 30,000. So the total cash received in on this statement is 120,000. The operating activity, you can see while you're paying your suppliers, there's workers' salaries and there's operating expenses. And you're also paying off the loan. And there was a dividend and owner payment on this statement of 3,000. And wow, asset purchases of 150,000. So the total cash paid out on this other statement is 201,000, and this is more in the startup business. So you're saying, wow, cash at the end of the period is 81,000 negative. So during this first year of operations, they've racked up an $81,000 cash deficit that will have to eventually be paid back somehow into the company. And it probably will if you keep at it and you're successful in your business. Any questions from that? Any comments? So
sorry, it took me a little longer to unmute than normal. Just, one of the things I've noticed in my business is that I track cash through my bank account more than I do it this way. What's the bad reason for tracking it only through my bank? I guess ultimately, I've always heard through the grapevine that you can be a profitable business, but unless you have cash flow, it's kind of not very meaningful. What does that mean when we say that? You can be profitable, but if you don't have cash flow, you could be broke the next day, kind of thing.
Well, I think what you're talking about is what we were just about to get into, but I'll answer your question straightforward, because there are timing differences in how we record things on an income statement. For example, you will sell someone a product and yet they won't pay you for it right away. So then on your balance sheet, you record it as an accounts receivable, and on your income statement, it's already recorded as a sale, but you don't have the cash yet. So that is very important to know. It's very important to look at your balance sheet and really, really watch those accounts receivable, because if there's somebody not paying you for your product, you've done all this work, you've spent all this money, and it looks like you're profitable, but if that's not something you're going to get paid for, that could be a real problem further down the line. Was that your question?
It was. Thank you. And sorry, I did jump ahead. Stop that now.
No, I like it. Good. Anticipation. Okay, so cash and profit are different simply because of the timing of it. Revenue is recorded when a good is transferred or a service has been performed, irrespective of cash being exchanged, which is what we just explained with that example. Cash inflow also occurs when the payment is received. Expenses are recorded when goods have been received or services have been used, irrespective of when the cash has been exchanged. So the converse is called accounts payable. So you'll set these up as accounts payable if you receive the goods in, so you're obligated to pay for them, but you haven't yet given them the cash. So you might look like you're better off than you really are because you haven't paid for it yet. But you've really got to make sure that you realize that obligation is there, and you're responsible for it. So again, cash outflow occurs when the bill is paid. So cash and profit. So they're different. And we talked basically about why they're different. Financing activity and asset activity affect the balance sheet, but not the profit and loss statement. We gave you some examples there. So the owner's investment affects the cash and owner's equity. The loan proceeds and payments affect the cash and liabilities. The asset purchases and sales affect cash and fixed assets. So you see these things on the balance sheet, but you may not see them reflected on the income statement. So it's really important in discussing these three statements to understand how they can all help you. One without the other isn't actually the whole picture. And we can go even further than these simple three statements that we talked about. We talked about the balance sheet, we talked about the income statement, and we talked about the cash flow statement. And then we also talked about how we could make them even more useful. We talked about we could set budgets and goals and compare them to our budget or compare it to previous year's results. And that's why I think really understanding financial statements is important to your business, because you as entrepreneurs have a special gift. You know how to make things work, but when they're not working, you can lean on the financial statements to help you figure out why are things not working, and where is it that I can make improvements to make my business more profitable, to have more cash flow, and where is the problem existing. And that's what these financial statements are, is a tool to guide you to further success. So I think that is the end of my presentation, and I'd love to entertain any further questions, comments, concerns you have.
So we have a question from Linnell. How do you see artificial intelligence changing accounting for yourself and your clients? That's a good one.
Yeah, artificial intelligence is great because what it's doing to the accounting profession is it's taking the real boring stuff away for us, and some of the reasoning too. But I don't think it's at the point yet where it completely replaces the human mind and the creativity that we as entrepreneurs have. It's definitely going to affect us, because if you feed it enough information, it will make a logical decision for us. So we have to decide whether we're going to embrace that or whether we're going to use our own thoughts on that. It's definitely something to consider, in my view. You must have an opinion on that as well.
Well, I have an opinion on that. Maybe not so much artificial intelligence, but just historically speaking, if you look at accounting practices and accounting over the last 100 years, if you sort of take it in geological time, then you're looking at things like, well, how did the advent of personal computing and computer networking and internet and software impact accounting? For a long, long time, accounting was done manually, bookkeeping was done manually. I can remember when I started my first business in my 20s, in the 90s, accounting software was still in baby stages, and you had to really know what you were doing to really work with it. And so most of us were keeping, ledgers and books, and the accounting firms we used had, floors full of bookkeepers doing manual bookkeeping with their firms and that sort of thing. So just the advent of technology in general often just brings efficiency. It changes how people do their jobs. It changes how much people pieces are needed and where they're needed in the roles. So I don't think it's a whole lot different than any of the other technological advances or industrial revolution advances or that sort of thing, where we're literally changing economically how we do the work, for sure.
I
Uh,
think in addition to what you're saying, it'll give us more and better information to work with, which is ultimately what we're striving for. You can't really have too much information. Information overload just doesn't exist. We have the ability to decide what will be useful to us. And if it gets fed to us through automation, that's great. If we don't have to create that ourselves, we have more time, like you say, to promote our products, to sell them, to make our businesses more profitable.
Hey, so who here? I'm just curious, on our call today. This tells you how old I am. On our call today, on our Zoom webinar today, uh, maybe if everyone wants to share in chat, I'm curious to know who's in the idea stage of their business. So you're thinking about it and you're maybe looking at business planning. Who's in the planning stage where you're planning and you haven't really got the first customer yet? Who's in sort of year one where you've got your first customers and you're just trying to understand what's going on in your business, and who's in sort of the 1 to 3 year stage of their business? If you want to just stick that into chat, then we've got some sort of idea. So we've got idea stage, for sure. So if you're in the idea stage of your business, this is one of the processes. Financials are one of the big processes in your business. So if you're curious to know about processing in your business and that sort of thing, we have some short videos on the BusinessLink website that tackle life of an entrepreneur and processes in business. And your financials are one of the processes that integrate with the other processes you have in your business to fundamentally understand how the thing you're building and what you're doing is generating the lifestyle you want for your business. So when people talk about, I'm going into business because I'm passionate about something and I want to have a lifestyle from it, then the financial dashboard you have in your business is a core piece of getting to the lifestyle and getting to the efficiency and getting to the understanding of what are the drivers of the profitability and cash flow in your business to get you there. Uh, we have someone who's been in business for 11 years, 1 to 3 years. So we have some 1 to 3 years as well. So who here's struggling, if you're in 1 to 3 or 11 even, with the how do I grow my business and access financing? That's probably a key piece for that. I know in my business that it was easy to start, but it was angst ridden for me to expand and grow because I was pouring money out the door far quicker than it was coming in, because it takes time to do that. And I could not understand what banks and lenders and everyone else were looking for from me, or how to build that out for them. for a few years, and I finally got help from a good accounting firm who helped me structure my financials and structure my story to the bank so that I could access a huge sum of growth capital for my business. Do you have any thoughts on that, Karen? What things we should look for in our financials like that?
I have I have a lot of thoughts on that. What you're talking about is a little bit past financial statements. Financial statements are just one part of a business plan. The story is what you're talking about and how to present it to lenders and how to present it to investors. Generally speaking, that's a something you want to most entrepreneurs and businesses start out with an idea, right? That's generally how we get started. We don't start out saying, now, how much am I going to make per se? I think we mostly start out with ideas. So if we can structure that so that we say, well, this is the purpose of the business, this is my mission, and this is my plan. This is what I want to do, and this is how long it's going to take me. I think it's going to take me a lot of what people want to see is your kind of like your to-do list, and how are you going to get there? And if you can write it up in a nice logical report form, and there are some standardized ways to write that up, that's a really great way to approach your banker. In addition, obviously, you have to have some capital yourself to put into it. Or if you want to grow it very slowly, that's fine too. But it's your plan and it's how you structure it. It's not just numbers, it's also in writing.
And I do know that when I went to BDC, because that's where I had my funding from for growth, I actually didn't present a business plan to the BDC. I presented a few years of my financials, and then I did have to tell the story in a very straightforward set of forms to them, and in a way to talk about what was my budget. Where was I going to spend this money? What were my growth? What were the strategies for growth? And where was I going to apply this funding? Specifically in my business to get those strategies done. So it's not a bad idea for those of you in Canada, and I know we have someone on the line here from Chicago, but if you're in the US, the small business, oh gosh, what is it called? I'll look it up and stick it in chat. But there's an organization there that helps you do that sort of thing in the US as well. Small Business Advisors, SBA, I can't remember what it is. But in Canada, and like many G7 nations, we have a development bank for entrepreneurs as a growth driver for small business in the economy. Ours is a crown corporation called the BDC. It's just for entrepreneurs. So you don't walk in to open a bank account at this bank. That's not what it is. It's an entrepreneurial bank that works with entrepreneurs to grow their businesses. So typically you're not going to access this bank if you're in pure idea or startup phase, but it's well worth your effort to engage with your local bank account manager. So someone who your account manager for your commercial bank account. Thank you, Linnell, Small Business Administration. That's what I was looking for. If you are building that relationship with your banker is interconnected with the BDC. Your banker is interconnected with all sorts of organizations who they can lead you to. They also have an idea of how your business is doing, and they can help you if you're speaking with them, maybe on a 6-month or annual basis, talk about the position your business is in, and you can already start to capture some of the hidden resources your bank may have for you that you didn't even know existed. So for example, my Scotiabank advisor was really great with me. They have women's networking events they host. They also took a look at my financials twice a year with me and talked about, well, if you did this or if we made some changes here or there, we could actually give you a line of credit if we could structure and organize what you're doing now. So they'll work with you very much, and you need to sort of put that plan in place early. So if you're in the 1 to 3 year stage, this is the years you're in putting that plan into place with your existing banker. And if you're finding they're not helpful to you, shop around. A bank is a bank is a bank often in Canada, just to be blunt, unless it's a credit union or the ATB. A big bank is a big bank. So shop around a little bit and talk to how they're going to partner with you to help you grow. first of all. And it's more than just, the fees on your bank account. It's what are some of the structures you have in place to help me understand how to access more of your resources? Who are you connected with at the BDC so that as I grow my business, you can connect me to your resources at the BDC. So leverage that person. As well, growth is going to require that you have a CPA. I'm just going to be straightforward about that. If you want to grow, if you want to access huge amounts of funding, you need that person in your pocket who can be a buffer between you and the bank and who can access the documents needed and help you create the things you need to get your ducks in a row for lending, for sure. I can't say enough how even when I was a young, broke 20-something entrepreneur, the one investment I made was my accountant. And I had such a lovely man who showed me how to do manual bookkeeping with old books and answered my questions patiently in his office, sometimes in the evening because I ran a courier company, and just was there for me. I didn't just create that. I stumbled on that accidentally, but I'm so lucky I did because I learned a lot from him and he took the time with me. So find an accountant who's going to take some time with you to answer what you may think are dumb questions, but are very important, relevant questions until you've got your answers.
I think what you're talking about is really important. You should surround yourself with people who actually care about you and your business. And that includes your banker, that includes your accountant, and that includes your customers too. And often when you start branching out and meeting with people, they find sales for you. Like one sale leads to another and so forth and so on. So it's really important to surround yourself with the right people, not just anyone. I thought that was one of the most important pieces of advice Linda gave. If you're not happy with them, shop around. You have that right. And no question is a stupid question. If you need to discuss things with people, likely someone else is wondering about the same thing, and just by voicing it or discussing it, it can lead to a solution.
We do have a question here. What do we consider as a huge investment? What's the benchmark from a bank institution perspective? Oh my goodness, banks have all sorts of internal ways that they determine whether you're a teensy weensy micro business or whether you're the giant, potentially huge technology company they want to go after. I know that when I spent my years at the BDC, I was for 4 or 5 years at the BDC as a small business advisor, and when we talked about investment and small business, it actually started out as micro business. We had to fight with the bank to say, oh, please don't call everyone a micro business. So we did some fighting there to get it changed from micro to small. But from their perspective, small is 500,000 and under in sales. And from their perspective of lending, over the internet lending from them for micro, starts in at around 100,000, and that's not considered huge on their part at all. So investment is investment, and it's tallied differently at different banks, and it's tailored to what your business is. So what might be a small business for one person is a big business for another. So if you consider yourself a big business at 500 and up, then that's great. That's your consideration of it. The BDC looks at that and categorizes you into small business. I don't know if that helps. Any perspective on that, Karen?
Yeah, I think the big thing is there is no answer to that question. Just go and talk to somebody and see how they can help if you feel you need help. Not everybody wants to be funded through a bank. There's all sorts of different ways to get funded. I mean, maybe your family is wealthy enough they want to help fund your business. Maybe I've heard of people funding through crowdfunding too, which is, it's more common than you would think. There's all sorts of different ways to fund, but I would really hope that as an entrepreneur that we all think that if we take something from someone, we will pay it back. we will do our utmost to pay it back. We're not just going to take this money and spend it unwisely. We owe that to the person that we're borrowing it from to make it a go of it to the very best of our ability.
In America, we have a nonprofit called SCORE. That's it, Linnell. They are generally retired business owners wanting to help. Yes, Linnell, that's correct. So you have you actually in the US, you don't have a development bank the way that other G7 countries do. So I was trying to get to that there for you. Yes, thank you. That's exactly what you have in the US. Any other questions, folks? We have a few minutes left. So if you have a burning question, now is the time to ask it so that you get to the answers you need.
If you have something to share as well, like I don't view these things as that I'm the all-knowing expert per se. I think that we all can learn from each other, and as entrepreneurs, I mean, that's the best way to be, is to share what you know, because somebody will give something back to you in return. There's always something you can find to share with somebody, and people remember that when you share a tidbit that everyone can use. But I mean, having said that, this topic was fairly straightforward, and I'm really happy that we explored other avenues as well as just straightforward looking at financial statements. I think that there's so much more than just numbers, and there's so much more that goes into information. We talked about artificial intelligence, very, very important there. Information is what really is helpful to us, and how we're going to be getting it in the future will change. Just as long as you realize it's just more information and it's coming to us in a different way, and that's great. That's helpful.
We have a question for you. I want to hear about your farm, if possible.
Well, really, really briefly, I smile whenever I talk about the farm, because we founded it about 10 years ago. I bought a dog from a breeder, and the breeder introduced me to her real estate sister, who sold me the farm. It was a quarter section, and I held on to it for a couple of years, and then I thought, okay, well, now I'm going to rent out some of the property. So I phoned all over the community who would like to rent some property. I found a guy. I call him my friend Phil now. Then I came up with the idea. He introduced me to someone else. He's into all sorts of farming, but he also introduced me to honey. Oh, yeah, we could put some bees on the property. Yeah, that's a great idea. Let's do that next. But the garden market, that was always something that's been near and dear to my heart. And I have a friend, Judy, who's been there from the beginning, from our first row of potatoes that we planted 10 years ago, and they got eaten by potato bugs. And so we didn't have a crop that year. The next year wasn't much better. We planted carrots, a couple rows of carrots, and had no water. So the carrots grew about an inch long. So that wasn't so great. Then we said to Phil, well, Phil, can you plow this up and put some manure on so we can, do a good job of this? And then we've heard put straw on top so that, you can, hold the water in and keep the weeds down. Well, Phil accommodated us. He brought us his manure and his straw. And sure enough, a crop grew out of his straw and manure, because it was filled with weeds and and seeds. So anyway, we got smart, and we then COVID eventually hit, and we were all looking at each other. What do we do? Let's do some raised beds. So we came up with the raised bed idea. We built 31 raised beds, and a very, very efficient way to plant, and employed youth to do that, because there was youth at loose ends, and it was a great way for us to build a community outside during COVID. We've recently started marketing a little bit more, and we visited our first farmers market this year in Kalmar, and we just had so much fun with the people there, and have lots of stories to tell about that too. It will expand some more from there. We'll keep, I have the honey guy, I call him my honey man, and then there's my friend Phil, who plants the crops, and then there's there's a community group that works on the raised beds in the garden, and we're really excited to keep it moving and going. And it's a great way to spend your time, a very healthy way. That's the farm so far.
What a great story. I love farming stories where everything starts by trial and error and disaster and then moves into something will be. It's not a farming story, sometimes it's an entrepreneurial story as well, or it's two in one. So everyone, you got the two-in-one story about farming and entrepreneurism all in one story. Thanks so much, Karen. I'm looking forward to. I have a place not far from where your location is, so I'm looking forward to eventually maybe connecting in person with you and checking out what's going on out there. So that would be lovely.
That would be perfect. I'd love to do that and exchange farming stories for sure. And hot dog campfire roasts are one of the favorite parts of the farming operation too.
Nice, love it. So everyone, we're hitting 3 minutes to 12, and I just want to thank everyone who's been on this session with us for attending today. Make sure I'm going to leave this open for another minute so you can all grab the handouts from today's session. I've also inputted a few additional links, mostly from the BDC, that link you to the BDC toolkit and blogs and downloadable guides and definitions and resources from there as well. So be sure to grab those out of chat. If you scroll up and down in chat, I'll leave it open for 1 or 2 more minutes. But I just want to thank everyone for coming today. You're free to stay. You're free to leave. We're going to stop the recordings, and this recording will be posted within 2 to 3 days on our BusinessLink website. If you haven't been to the BusinessLink website, please go check it out. I know it can sometimes be a little confusing as to where do I go for what, but click a few links open and see where some of our guides are, where some of our small business videos are. Check into our YouTube channel where we post these recordings and others, and do some digging and enjoy. And I wish you all very well with your business ventures as well.
Thank you, everyone.